Do you find choosing an equity fund difficult? It certainly is. I mean, with so many categories of funds available, choosing an equity fund can actually be a nightmare. Welcome to Marin Talks, my vlog where I take you through the steps of investing. I've been talking about mutual funds on the various categories, on the various options in funds, and today in vlog 25, I'm talking about the various subcategories in equity funds or the types of equity funds. First off, you have index funds. Index funds basically invest into stocks which are there in a particular index, like for example, Sensex or Nifty 50 or Nifty 500. They pretty much invest in the same proportion that's there in the index as well. So, for example, if a particular bank has a 10% allocation in the index, the fund also would follow the same allocation. Index funds is an easy form of investing. It's also known as passive investing because here you're really betting upon the index to do well simply because you expect the Indian economy to do well. And you're really keeping your costs low because there's absolutely no active management and hence the costs are low. Now, you have an option to buy an index fund from the mutual fund, or you also have an option to buy an exchange traded fund on a particular exchange. The difference being that when you buy an index fund, the buy and sell happens through the fund house through an NAV, which is typically end of the day NAV. In an exchange traded fund, since you're buying through an exchange, it's a real time price. But remember that you cannot do an SIP or a systematic transfer plan in an ETF, and hence, I think index funds work better than ETFs. Presently, the liquidity in ETFs is also a little on the lower side in India. Moving on to the actively managed space, there are many funds available like large cap, mid cap, small cap. To really understand what these funds mean, you first need to understand the meaning of market capitalization. Market capitalization is nothing but the total value of the outstanding shares in the market. SEBI classifies large cap as the first to the 100th company by market capitalization, mid cap as the 101st to the 250th company by market capitalization, and small cap as the 251st company onwards on market capitalization. Oof, sounds tough, doesn't it? There are different types of funds categorized based on market capitalization. The first being the large cap fund, which needs to have 80% of more invested in large cap stocks. These funds work well for conservative investors who do not want to take too much of investments with their stocks and prefer to remain with large companies. Then you have the large and mid cap funds. Large and mid cap funds need to have a minimum of 35% in large cap stocks and 35% in mid cap stocks. You also have mid cap funds which typically need to have more than 65% invested mainly in mid cap companies. Small cap funds need to invest a minimum of 65% in small cap stocks. You also have another interesting category in equity funds, which is the ELSS stocks or the equity linked savings schemes. The equity linked savings schemes is an equity mutual fund. The additional benefit in this particular fund is the ATC benefit available on investment with a lock in of 3 years. Apart from this, there are many other funds that are available like the dividend yield fund, value fund, contra fund, focused fund, sectoral fund, thematic funds. I typically don't recommend any of these funds because they're too concentrated in nature. Remember, diversification is always important, and hence I don't recommend these funds. A couple of things that you need to keep in mind when you choose equity funds. First and foremost, you must have a 7 to 10 year holding period for your investment. Especially for small cap funds, you need to have at least a 10-year holding period. Do not go just by the past 1 to 3 year performance. Look at long term consistent performance and look at various other factors when you actually choose equity funds. Mostly, I find people looking at the last 1 year returns and choosing funds, and that's not a great way to go. You need to be very clear about the sort of risk that you want to take. Are you wanting to be conservative, you want to be moderate, or you want to be high risk within the equity space and choose funds accordingly? My recommendation, well, I think a combination of index funds, mid cap funds, and a small cap fund works really well. And of course, the ELSS funds for tax saving. You really don't need any other type of fund in your portfolio. The last point to remember is not to have too many funds. I think having 4 or 5 funds is really enough in the portfolio. I find people tend to try and keep looking for different funds every time they want to invest. Choose your fund rightly and stick with that investment. Coming to choosing your funds rightly, I know it's not an easy task to find all the data and analyze all the data. Do check out my website www.finsafe.in. In the Knowledge Center, we have a list of schemes which have been ranked based on quantitative analysis by an external agency. If you're confused about which equity fund to buy, do have a look at this particular section in our website. Please click on the bell icon to subscribe. Do write in with your feedback. Till then, bye bye.